What's up everyone, this is Mark with Sonic Tax and IRS Advice. Today I'm going to go over a simple tax return. It's going to be a scenario where the taxpayer is just a single W-2 wage earner living in a state without state income tax. Let's get straight to the form. The only income number that you'll see on here is their $45,000 of wages. And so that is also, since they don't have any other income, that's also their total income and their adjusted gross income down on 11A, the number at the bottom. So if we keep going down, the next number that we see, and this is the Form 1040. This is the individual income tax return form that every individual who files a tax return uses this form. The next number that we see is $15,750, which is the standard deduction amount. And there's a little chart table right here that has that amount. And so it depends on your filing status. If you're married, it's about double. If you're a head of household, which is if you're not married and you take care, you cover the support of people living in your home, dependents, you could qualify for head of household. But this taxpayer is just single, so that $15,000 gets subtracted from the $45,000 to get $29,250. So a simple subtraction to get $29,250, which is the taxpayer's taxable income. And then the federal tax amount on that is just calculated from your federal tax brackets and your tax tables. And so that federal tax amount is $3,275. And I'll insert the tax table here and show you the calculation of what percentage that is. And so from that $3,275, under W-2, this taxpayer in this scenario had $3,000 of federal tax withholdings. So that amounts that were withheld on their paycheck throughout the year, so they get credit for those now. Their federal tax is calculated at $3,275, but they had withholdings, basically prepayments of $3,000. So you subtract their withholdings from this tax amount that's calculated, and so that calculated federal tax amount of $3,275, you subtract $3,000 for that, you get $275. The withholdings that they had were less than the federal tax, so in this scenario they ended up owing $275. But in the case that you have more withholdings than your federal tax calculated, you would get that back in a refund. And in other scenarios where you have kids or other tax credits, then your refund would be boosted. Or you could have a lot of tax withheld throughout the year and then get more refund at the end of the year. But I mean, it's just when you're paying it.